If you trade NQ without these risk rules, you're not unlucky, you're reckless. These are the risk rules that I refuse to break because breaking them costs me money. Before we jump into the rule number one, my name's Anthony and I trade futures, primarily NQ, using prop firms and order flow as my confirmations. So if you want to become a consistently profitable trader or just up your game, you're gonna wanna hit that subscribe button and give this video a thumbs up if you appreciate it. Rule number one is going to be choosing a time. So every day I know the time that I trade. And if you don't know the time you trade and you limit yourself to a specific time, then you're leaving a lot of profits on the table, and not for the reason you think. The reason why a specific time is so key is because you may see a setup that forms outside of your specific trading time. You'll take it and it'll fail. You'll just be on the chart all day and your willpower will wane because you're on the chart for so long. So you kind of want to have that real sniper focus and focus on what's the best 1 or 2 hours of the day for your specific strategy. Some people trade Asia. I personally trade 9:30 to 10:30 a.m. So I trade 1 hour. And what that does is allows me to be so focused for that hour that I'm able to perform way better than someone who's trading for 2 hours or someone who's trading for 3 hours, or some people trade all day. And the issue is the longer you sit staring at the screen, the more and more your discipline and your willpower is going to decrease. You're so likely to spiral into being triggered and basically revenge trading, tilting, and breaking rules. I never take any entries past 10:30 a.m. no matter how good of a setup it looks. I make myself shut it down. So I'll get out of my software and out of my whatever software allows me to take entries. So that way, even if I do see a setup, I'm not logged in. So I'm not able to get that impulsive entry because it's outside of my trading window. If you continue to keep taking trades after your trading window, there will come a day where, yeah, you'll take a win, but then you'll trade again, you'll take a loss, and then you'll try to take another trade to make up that loss, and it'll be even bigger loss. And what do you do after that? You increase your size, and then you take another massive loss. Next thing you know, you've blown your accounts. This happened to me plenty of times. I'm sure this happened to you plenty of times. Jumping into rule number two. So we're on the NQ chart right here. Rule number two is going to be having a max number of entries per day. And this all ties into discipline and willpower. A lot of people say you need a lot of discipline for trading. You just need these set rules to follow and you'll become disciplined, because if you're only allowed to take 3 entries per day, you're going to have a lot of discipline on those 3 entries. And then if you shut it down, you will follow your rules. The problem is once you get to entry 4 and 5, your discipline and willpower has decreased so much. So what happens is you get in a trade, maybe you move your stop or maybe you move your take profit and you start breaking and bending your rules when you shouldn't be. And that's simply because you had so much willpower put into those first 3 entries that now it's just decreased. And now emotions start to get into the play because maybe your 3rd trade was a loss. So you're like, oh, let me take one more trade because I was up more before because I had, maybe I had 2 wins, and then the 3rd trade was a loss. You're like, oh, I was up more before. Let me take one more trade. And that's exactly the issue. So if you always cap yourself to 3 entries or whatever entries is good for you, you could do 2 entries, you could do 3 entries, you could do 5 entries. I've played around with 5 entries. Every once in a while, I would go on a tilt rampage. So I found the most success with 3 entries. You could even do 2 entries. So 2 to 3 entries, probably best bet for most traders if you're trading NQ or ES futures. The 3rd rule is the max loss limit. The reason why the max loss limit is so good is because it prevents you from, you guessed it, revenge trading or trading tilted. Anytime I take more than 2 losses or even 2 losses, I feel emotional. I feel frustrated. I feel annoyed. And you never want to be looking at the charts while you're frustrated and annoyed, because you'll start to look at things that you think are entries, but they're not entries. You might be looking at the chart and see a setup, but it's not really your setup, or something's close to your setup, but you take it anyway because you're frustrated, annoyed, possibly jumpy, just wanting to get back in a trade to make back the losses. And that's never a good time to trade. So I've personally found from journaling that I do feel some emotions build up after 2 back-to-back losses. So if I ever take 2 losses, I'm done for the day, even though I'm allowed 3 entries in the day. That saved me plenty of times for 2 reasons. The tilt reason, and the second reason is sometimes a trading day is not good. It's not good for your strategy. Like, there's plenty of days where you'd be looking at the chart and it's just not a trend day. There's lots of chop in the morning. It was not giving you the opportunity you wanted to see during your trading window. And that's perfectly okay, because there's plenty of trading days that will just trend from the start. If you are, using that trend as your strategy, right? Maybe you get a strong move down here, you take a short here, you take a win, you take another short, you take a win, and you're done for the day, right? There's going to be plenty of great trending days in the morning. If you go back to another day, Wednesday, you had a really choppy start. Maybe you got chopped out and then the trend formed. Who knows if you were patient enough? But the point is, if you always have a max loss system, you're going to avoid this kind of day. This is the kind of day that will blow your account if you're trading with trend. It depends what your strategy is, of course. There's lots of mean reversion strategies, trend strategies. But if you have a trend strategy and you come up here and you take a long and you get stopped out, and then we come up and you take a short and then you get stopped out. So then you take a long here and you get stopped out again. That's how you blow your account. So not all trading days are created equal with the amount of opportunities. So that's why you must have a max loss limit to avoid continuing to trade on days that have poor price action for your strategy, and so you don't get emotional after the second loss. I personally feel nothing when I take one loss. Like day starts, first trade of the day, it's a loss, I feel nothing. If the second trade is a loss, I definitely feel that frustration or annoyance. So what do? I shut it down, I leave, I go do something else, and I do some other work for the day. What that does is it makes sure that I don't spiral into a crazy amount of unnecessary trades. Rule number 4 is all about confirmations. You want to have and know your confirmations to take the trade. Never ever enter a trade and not being able to instantly rattle off multiple confirmations of why you're in the trade. And this goes for any trading strategy. Every single trading strategy that you ever implement should have multiple confirmations. What that means is you shouldn't be entering a trade because you say, I think it's going to go up, or it feels like it's going to go up. You should be able to identify the confirmations and the reasons why you got in the trade. For example, on market open on Friday, there was actually a ton of absorption on the 1 minute candle. And we're going to take a look at that right here. So right on the market open, these orders came in on the sell side, all this 189, 188, 188, 188, and price did not move down much. So we literally went down 605 to 95. We went down about 5 to 10 points when there was a massive amount of sell volume that came in, but there was such little buy volume. And that's not right. That's how you know is high probability of absorption. And if we reverse, we're going to reverse big in the opposite direction. So if I wanted to take a long, that would be confirmation number 1. Confirmation number 1 is I see a lot of absorption, like sellers got absorbed down here. Confirmation number 2 is maybe you had a long bias because of the uptrend. You could see on the 15 minute at the market open, we were downtrending. We took out some liquidity on the 1 hour chart, and we actually had a bullish market structure shift right there at 6 a.m. where we closed above the swing highs to the left. And then until market open, all we did was we retraced back down into that support that was created before the initial move. So you could have said, yeah, I had a long bias at the open because of that reason. So that'd be confirmation number 2. So now you have a bullish bias because of that market structure on the 15 minute. You have absorption that came in at market open. So that's your second confirmation because we were on the footprint chart here. You had the absorption that came on the market open. That's already 2 confirmations, right? So now you may say, okay, third confirmation, I'm going to be looking at time and sales for any large buy orders to come in after we already saw this absorption fail. And that would be confirmation number 3. And then the fourth confirmation could be after those large orders came in, I want to see price confirm the move by moving in that direction a few points immediately. So that way I know that those buyers that came in didn't also get absorbed. You can actually see this on the footprint chart. Basically, you don't need time and sales, but these orders here, 47, 76, 60. Let me zoom in for you. 47, 76, 60, 47, 57. But on the left side, you see 0, 8, 33. These are imbalances. These are stacked imbalances. So you saw absorption on the sell side, confirmation number 1. You saw that you had a bullish bias because of the market structure. That's confirmation number 2 because you wanted to long. Confirmation number 3 is you saw the imbalance form. You saw large orders come in on time and sales, large buyers. So that would be the next confirmation. And then the last confirmation was price action confirming the move by immediately moving a few points. So then you would get in your long right after that confirmation of the move. I typically start with a 1-to-1, 15 point stop loss, 15 point TP, and then I trail after that. So you would get the 1R, you would hit 14 points, and then you would actually just fall a couple ticks shy of 2R, and then it would come back to possibly break even. It looks pretty close to break even, but Maybe you didn't get stopped out break even and you got 2R, right? So that's stacking multiple confirmations, never one confirmation. I personally actually always have to have a minimum of 4 confirmations, and 5 confirmations is my A plus setup. So if I have 5 reasons to enter this trade, then I'm entering the trade. If I have 1 or 2 reasons to enter the trade, I'm never entering that trade. You will never see me enter a trade based on just 2 reasons. Why? Because I'm looking for A plus setups. The more confirmations you can have, the higher the likelihood of the trade working out, but also the less often the setup obviously comes. If you're trying to look for 8 things to align for you to enter your trade, you might get a trade once a week. We kind of jumped into the last rule by accident there. The last rule is having a take profit system. If you don't have a take profit system, there's no way you're going to be reliably able to extract the most profits from the market. Are you going to have a 1-to-1 R on all trades? Are you going to have a 1-to-2 R on all trades? Whatever you do, your system should be the same on every entry. You will never be able to know if the trade you're in is going to run 4R or 5R. It could go 2R, stop you out for a loss, and then go 5R. It could go 2R, stop you out break even, and then go 5R. It could go 1R and then become a loss. You don't know when you enter, so all you can do is manage the take profit system and have that take profit system in place for every single entry. If you're trading prop firms, especially ones that have trailing drawdown, then you should probably just do 1R on all entries. That's what I found the most success with. You could go max 2R. What I like to do is I go half off at 1R and then half off at 2R. So it makes the whole trade 1.5R if it does go 2R. Let me know in the comments down below if that doesn't make sense to you. I can explain profit taking systems in a whole new video. But if you're trading your own capital, then for sure you can just do 2-to-1R and let it hit 2R or stop loss. Typically, I found the most success with a 2R system if it's your own funds. And then I found the most success with prop firms if you just use 1R. Because you want to have a high win rate when you're trading prop firms, because any loss streak can blow the account since the drawdown is not very high, of course. So you're going to want to use 1R as a system, at least until you get out of the trailing drawdown, and then you can start to increase back to maybe a 2R system. Always know the stop loss, and then always know the take profit, and then always know where you're going to take partials if you are going to include that in your system. Those are the 5 non-negotiable risk rules that most NQ traders don't follow. And if you follow all 5, you're going to be well off on your way to becoming a consistently profitable trader and saving yourself a ton of unnecessary losses. Rule number 1 being time. Choose that specific time window you're allowed to trade. Rule number 2 being max entries. Decide on a number of maximum entries you're allowed to take within a day to preserve your mental capital. Rule number 3 is having that max loss limit. Is it 2 losses on the day? Is it 1 loss on the day? Is it a dollar amount? Decide on that so that way you don't tilt or revenge trade. Rule number 4 is to know your confirmations before you enter the trade and how many confirmations you need to even take a trade. And rule number 5 is having a take profit system and knowing that system before you enter every single trade. Is it 1R? Is it 2R? Is it partials? Know your stop loss and implement that on every single entry. That's going to conclude this video. Hit that thumbs up button if you appreciated it. Thanks so much for watching, and I'll see you in the next video.